Hello, everyone. Mike Arnold here, co-founder, Path Trading Partners, along with Bob Iacchino here for the weekly ETF sector overview. By the way, if you are new here, please do consider subscribing, ring that bell, and hitting the like button. Longer-term subscribers, leave some comments and like the videos. All right, so where do we sit right now? By the way, the S&P, NASDAQ, Russell, and Dow all tipped to longer term buys with the same system we use to analyze the sectors. So keep that in mind. Now, generally when things tip to buys like this, especially after a multi-week ramp, we tend to get consolidation or at least a pullback move. And yes, because I got a lot of questions about this, just with the overall broad market, you can have a tip back to sell mode, and that is pretty significant. So I will let everybody know it is a possibility, but unless that happens, we've got to stick with the longer term probabilities, which is we will see, so at least for the next possibly few more weeks, some more upside ahead after a consolidation or a pullback, unless that pullback is more substantial and does flip it back to sell mode. But that is more often rare than not. So XLE did not, because it's still in long-term buy mode. Now, crude has triggered a massive double top, which could take weeks, if not months, to unfold. So there's still plays in crude, especially with crude short-term rally. Crude did trigger also a double bottom, so still watching for more upside. But I need a strong pattern for energy plays, especially with daily, with the XLE entering overbought. Especially you could poke higher, especially to this 50, the 79.40 area, and form a divergence with cycles at the top. Then we could go into consolidation or a pullback. So I am going into this week, even though it's in buy mode on the longer term, a little more cautious. XLRE, real estate, triggering a buy. The pre-warning would be if next week we do a complete reversal and close below this week's low, could flip it, it might not flip it back to a sell, could. Again, we've been on a multi-week run to the upside. If you look here on the weekly, we're in overbought. So I'll be watching for a consolidation or a pullback. Then and only then I will look for real estate plays. Now we are between the 50 and the 62.5 on the daily, and I'm expecting even if we poke up a little higher, there should be some significant resistance right around 46 before we get consolidation or pullback. So even though it did flip to a buy, I am still very cautious in real estate until we get that pullback move. XLF, we finished the double top never triggered. The double bottom went through targets, and it also triggered into a buy. Again, same thing. Watching for a pullback. The only thing that could possibly tip it back to a sell would be a weekly reversal on a close below this week's low. Now, we're up against some pretty significant support right around this 35.65 area, so I'm actually watching for a pullback again in this to about 34.60 to 34 before I'm really interested in chasing financials higher. After we get consolidation or pullback, I will start looking for more financial plays. If you're in anything already, which would be the case from a lot of these earlier patterns, it would be to manage your stops and keep raising them up, but I'm not aggressively looking for new entries. XLK flipped last week to buy mode, followed through this week. See, last week we flipped to buy mode, and then we got the little pullback. XLK's technology got the little pullback to the daily rotation zone and then continued higher. Up against pretty significant divergence and might be forming a triple divergence. Up against significant resistance and might be performing a triple divergence. So up in this area, it did close now above the 62.5. So overall, I'm still favoring a return to 158.50 after a consolidation or pullback. Would not be chasing technology higher. Here would be managing stops unless there's a fantastic stock that maybe pulled back on earnings and is breaking out to the upside. Then I would consider it, especially with weekly cycles pinned at the top and overbought on the weekly. So getting very cautious with technology until at least we get another pullback. XLI triggered a weekly buy, Closing above the 62.5, so statistically we should return to 104.93 to 107.88. Same thing here, watching for a pullback after this multi-week run. Daily RSI pinned at the top. Weekly cycles getting to the top. Actually, this closing above the 200. So the first level of support is about 98.54, and then major support coming in about 97.38. So I will be watching for pullbacks there and then start looking for industrial plays. A little cautious here because weekly getting into overbought with cycles at the top. So I really want to see these pullbacks before chasing anything industrial related higher. XLY, consumer discretionary, triggering a buy. Again, watching for that consolidation or pullback. All right, pullback areas on this would be 165.50. Just mark some of this off. Right around, that's close enough. Right around there. And then possibly 162.62. What we don't want to see for the bullish case, at least in the short term, is a drop really below about 160. Then we'd be watching for the gap fill. So then I'd be hands off until we got that gap fill. And this is pretty close to a triple topping area against this. Now, this did not close. We need 170.01. This closed at 169 something. So again, no close above the 67.5. We will be watching for that this week. On a weekly basis, though, cycles pinned to the top and hitting way overbought. Now, overbought can continue, but at least we should see some consolidation before chasing these things higher. Major resistance coming in at 176 for XLY. The market's just getting bid and bought higher. Consumer staples did trigger a double bottom. Triggered buy mode a couple weeks, so we should still see much higher prices over the next little bit in consumer staples. That is one of the sectors I will focus on pulling back here. Now this is a really weird double top, so I will keep an eye on that in the short term should we get a move back below, or especially a close back below 73.94. Then I'll be watching a pullback forward, a bigger consolidation. The same thing sits. I don't care whether it's staples or anything else. I'm watching for starting to get into some areas where we need to see consolidation. At least consumer staples is breaking out of consolidation and can sit to run higher. My next major target is about 76.50. We get a close above there, 78. Well, sorry, about 77.73 to 78. Daily cycles not yet at the top. Weekly cycles are at the top, though, so that's the only cause for pause. But that's one I will be a little more aggressive in looking for setups in consumer staples if I can find anything. XLV. It triggered a buy mode, and this is healthcare back on the beginning of July, continued higher. Still cycles at the top on the weekly. Still no close above that 62.5, so I'm still watching for that key close just a little higher above 134.17. Pretty much against this key area. Don't like this as much as double top without that move, but we will still map it out with this little spike down move. So I'll be much more patient if we get below 130.37, 128.65, 127.79, 126.94 are the targets lower. That's only on a closing basis below 139 or 130. Let me give you the exact number, 130.37. But healthcare is still in long-term buy mode. Still in the rollover zone right here, so we could actually see a pullback. It'd be interesting because a pullback could potentially reverse it back to sell if that double triggers and it hits all three targets only. XLB, no, even with this rocket move, still no long-term buy. This is one that I will just wait for it to trigger. So there's enough other things that are interesting, so I don't need to chase anything in the Material Select Spider. In the rollover zone here, weekly cycles getting to the top and also very overbought. So we'll watch for a pullback, but no long-term buy in this yet. XLC, no long-term buy. So this is something I'm just going to watch this for another rollover play eventually. Overbought, cycles getting to the top. So going to be very patient still with XLC and watch for a pullback move and sit where it stands. Also against the weekly rotation zone. So this is a key area that we could see a rotation back down. XLU, we have utilities, which have been in a buy mode back since the end of June. Got that close above the 62.5, hit the 87.5 and the 100 right in here. So this is getting overdone. Weekly cycles getting top, almost overbought, and daily cycles at the top. Bonds and notes in an interesting position. Definitely not going to chase this higher. Watching for at least a consolidation move and a potential pullback to about 75.30 to about 75.50. And you know, you can always watch for the reconnection with the daily rotation zone. Then I will possibly get more interested. But until that happens, very overbought, not chasing this higher at this point, but still in buy mode. And that buy mode was nice. It did trigger some potential plays to get to long. XRT. What we have the retail ETF still not in buy mode. So pretty much ignoring retail until we get into buy mode. We'll glance to see if this is in a topping area, but if we get back to the rotation zone, if there's any retail plays that are interesting, I'll take a look, especially after some of the retail earnings that come out this week. Other than that, hands off for me in retail. Transportation, back into buy mode. Did not close above the 62.5, so just in buy mode, right with that. Daily cycles at the top, weekly cycles at the top, overbought. This is not one I'm going to chase higher. So I'm waiting for a consolidation or pullback in transportation. And my key pullback level is about 241.50. Commodities, you see here, basing still in buy mode and trying to break out. So if it gets back below about 24.50, not interested. We start getting above here, though, 26.38, and I'll start glancing more for re-entries into commodity plays. So do keep an eye out for that in DBC, and you can see here that's pretty significant resistance and also back above the 50 on the daily, and you do have gaps left behind. And once this gets a move on, it could make a pretty quick run to about 27.50. So do keep an eye on some commodity plays with DBC. DBA. Back to buy mode. Triggered sell mode, stayed in sell mode for a few weeks, triggered back to buy mode. So agriculture-based things can be of interest again, especially with commodities overall breaking to the upside. Key resistance coming back to 21.78, and you see here breaking above. The only concerning thing on the daily is cycles at the top. So won't chase it higher, but watching for a little consolidation in this to get out of overbought and then looking to buy the next potential pullback. But waiting for a pullback. SMH, interesting, because we never hit the final target on this double top. And let's just see based off of this. So as long as this does not get a close above 270.50, essentially, then we're still looking with the double to be short. Now, we have this other bot that just flipped into buy mode, right? Did it? Yeah, it did just flip into buy mode right here. So we have mismatched signals. But since this has already made a long run, and we have dailies come to the bottom but headed back up, weeklies still pinned to the top. And watching to see here, I am going to wait and see unless we get above 249, and then it might be interested to see if there's any semis and good positions to play to about this 200. Other than that, I am a bit cautious with the mixed signals right here if it can't get above here, because we do have a potential double top, which would only trigger on a close below 229.39. So unless I can find some strong setups in semis, I'm going to steer clear of it with the mismatched signals. Gold, trying to put in the bottom. Gold miners still a long way off from buys. Short term is this little flagging pattern. Going to get more interested if it can break above 27.30 for a run to the 50. Other than that, it's got to really stay. It can't really break down too much from this flag pattern. Otherwise, it will be back to hands off and watching for a pullback in gold. And here's the little flag pattern right here. Let me stick it right there. So really don't want to get it below the bottom of that flag. VTV, Vanguard Value, double bottom triggered. That double bottom first and second targets hit and also flipped the other system to longer term buy, closing right at the 62.5. The close was 142.59. The 62.5 is technically 140.62, but we already have the other double in play. So still looking for value plays. There aren't many good value plays out there, but still watching against the 200. Overbought on the daily, overbought on the weekly, so I'm watching for a pullback before I get aggressive, and the pullback levels will be about 140 to about 139.50. Major support, don't want to see it get below about 138.50. I'll put a line there. Okay, and it's nowhere near invalidating. Even on a pullback to here would not invalidate the double. VUG, growth. Again, back to buy mode. The 62.5 was 265.22. Where did this close? 264.64. So technically no close above the 62.5. Daily getting closer to back to overbought. Weekly pinned at overbought. I'm going to be patient and watch for a pullback, especially the two key areas now I'm watching before I chase growth higher. 258.45 to about 255. And we'll watch for a key thing. Then above there, especially once we get the close above 265.22, watching for a run back to 274. So as you see, lots to choose from in bullish mode. I would still be pickier with the entries. Many things are overbought and significantly overbought. Does not mean they can't get more overbought. However, the reward to risk, from my perspective, is not good. So things that have pulled back still with decent earnings and making a good, at least short-term bottoming pattern or breaking out of consolidation after pulling back would be the things that would be preferable rather than chasing things higher. Now, after we get a little pause and some consolidation or at least a pullback to some of these daily rotation zones, then it will get more interesting to play for potential run up through possibly the middle of September. Now, can anything still happen in the markets? Yes. Could we have disaster? No. Could theoretically the markets crash in August? Theoretically, they could. Could all these short-term buys, or I guess the long-term system buys, flip in the next week to sells based off a catastrophic down move? Theoretically, yes. But you have to manage your probabilities and go with the probabilities. It's also why you trade with stops. Not only stops on a closing basis, but what we call walkaway stops. So if something catastrophic were to happen, which we are not expecting, especially in August with thinner markets. But you know what? It's a strange, crazy world right now. And you got to always manage your stops. Now, once we get away from, there's not as much, there's Fed meeting minutes on Wednesday. There's not as much key reports coming out. We have Jackson Hole at the end of the month. But we don't have another rate hike decision going into September. Now, going into September, which we're at the middle of August right now, I get more cautious for potential crash modes or for potential major pullbacks. But going in, considering that we've just had a ton of things shift to longer term buy modes, I got to give it the benefit of the doubt and go with, after the next pullback, higher prices at least for the next few weeks, unless something changes and we flip back to sell mode in the next week, which I'm not expecting. With that, I will talk to everyone later. Thank you for tuning in. Bye for now.